Hey, good morning. Welcome to the Morning Brief. My name is Troy Epperson. I'm with oneontrading.com. Thursday today, March 14th, what do we have on the docket? Well, we had a whole bunch of red numbers. Woo! I love red numbers. That means the market's going to move one way or the other. We had core PPI, which came in hot at 0.3 versus 0.2. Core retail sales came in bad, lower than expected. And PPI month over month was double what was expected, 0.6 versus 0.3. Retail sales month over month was less than expected, 0.6 versus 0.8. And unemployment claims were slightly less than expected. So good news on unemployment, bad news on retail sales, bad news on PPI. And what does bad news mean? Means that the Fed will do what? What's the Fed going to do? Okay, so retail sales going down means the consumer is slowing down. Unemployment claims being better than expected means less people are unemployed. That's a good thing. Retail sales going down is a bad thing. PPI going up means inflation's still here. So we got some mixed signals. What's going to happen? I think we're going to net out. It's going to be kind of a neutral situation. We'll look at that in a second. We also have business inventories at 10 a.m., 10:30, natural gas. So let's look at the daily chart. So daily chart looks to me like we're getting a much tighter range here. The range is tightening up. It looks toppy, but I've been saying that for 3 weeks. So it is what it is. Look at this. Yesterday's volume was down. We've got declining volume over the last 2 days. Where could we go? I think we could jump up as high as 5,300. We could come down all the way down, easily down to 5,200, maybe even down to 51.57. Hugging that trend line. So we're an uptrend. It's a stair-stepping uptrend. Until it's broken, it's going to probably continue, but the volatility, while it's being measured by the VIX, is not going up. But let me tell you, if you're trading, you know volatility's through the roof. The markets are thin. Movement is crazy. Looking at the inventory. So here's something cool on inventory. Little down day, big inventory. So even though inventory is correlated in direction, to me, this is not right. You should not have this gigantic sell, 25,000 contracts, and only a very, very small decline in price. So even though these are correlated as they should be, it bothers me that one is so much more than the other. And then you can go back to the previous day, big, huge day up. Look at inventory was only up 900 contracts. So even though they were correlated direction-wise, they are not correlated size-wise. So I think this is a red flag. We need to be aware that that's going on. Intraday chart here, the overnight action was approximately 19 points. That's actually about average. Average is 20 to 22. So nothing really to get excited about. Where do we have support and resistance on the near term? 52.65, 52.77, and some confluence right under the 5,300. On the downside, we got a whole bunch of confluence at 52.37, 52.16, 51.91, 51.75. Stock Trader's Almanac for today is 42.9, so a negative bias by approximately 7.1% to the downside. So Stock Trader's Almanac is saying there is a negative expectancy today by a factor of about 7.1, 42.9. Get my math right. Hope you guys have a great day. Happy trading. And remember to subscribe, comment, and like. See you tomorrow. Hey, thanks for watching the Morning Brief. Check out my website for more information, oneontrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com. Thanks.